Good morning, everybody, and welcome to the latest edition of Talking Bull. It's the 12th of July. I'm Joe, joined by Jamie. How you doing this morning, Jamie?
Yeah, not so bad, thanks, Joe. Not so bad. It's another hot one this morning. It feels like it's already like 25 degrees here in London. So, yeah, just trying to survive the heat.
Yeah, absolutely. Well, we've got to make the most of it because we don't get it a lot, so we best not
Very
moan,
true.
hey?
No, you're very true, very true.
Cool, right, let's get stuck into the latest headlines then. Mixed US inflation data expectations. The latest New York Fed survey recorded an increase in one-year inflation expectations to 6.9% from 6.6%, but three-year expectations declined to 3.6% from 3.9%. Consumers overall were less confident in the labour market. Markets continue to remain uneasy over the threat of elevated US consumer prices reading, which is due out tomorrow. The Fed July decision is still not clear cut. The Kansas City Fed president stated that the speed at interest rate increases is an open question. The pace needs to be balanced carefully against the state of the economy and financial markets, while moving too fast would risk oversteering. So the key debate at the minute is whether or not there'll be a 50 basis point rate hike or a 0.75 basis point rate hike at the next meeting. In terms of the US Treasury yields, they edged slightly lower yesterday, regaining some ground on Monday, with the 10-year yield dipping below the 3% level, and there was a further net retreat today toward 2.96%. Ultimately, the main story in the markets at the moment is the US dollar, and that continues to dominate, posting further gains yesterday. No change in trend at all, despite the decline in the US longer term bond yields. The yen remained under the same pressure. But on the downside, we saw dollar yen hitting fresh 23-year highs yesterday before a slight correction. And euro versus the US dollar also dipped very close to that key parity level, with the dollar index at a 19-year high. Overnight, we've seen a strong increase in Chinese loans. New loans increased by 2,810 billion Chinese yuan for June, which was well above the consensus forecast. Overall, social funding is also increased significantly, and again, well above market expectations. So the data maintained an element of optimism that the Chinese authorities will provide strong support for the economy. There were, however, further concerns over the Chinese banking sector and reservations over coronavirus trends. And finally, on to the situation in the political scene in the UK. The official nominations for the Conservative Party leadership candidates will be held today, with the first round of MP voting taking place tomorrow. So we'll wait and see what impact that has, if any, on the UK benchmark index and also pound sterling. Okay, so let's get stuck into the charts. As mentioned, pretty much everything is dominated by the US dollar at the moment. And we can see here from the daily chart that it really is on a tear, moving considerably higher again yesterday, this big green candle, and we are coming up just shy of this first level of resistance that we have highlighted on the chart at 108.74. Above that, we're looking for a test of the 78.6% Fibonacci retracement level at 110.25, but we are at 19-year highs on this, and it's showing no signs of slowing. In terms of that red line, we have to go some way back to see why that was relevant. We've got some levels back here to potentially reference, which were back in 2002. So that is pretty much setting the tone for everything at the minute. And if we take a look at all the other currencies linked to the US dollar, we can see why. Starting off with Aussie, that broke down over the last couple of sessions, and particularly yesterday, with this big red candle taking out that 50% fib level at 67.56, and we're trading below it again this morning. So no signs of that slowing down. That 50% Fibonacci retracement level has been relevant since really the height of the pandemic, where we saw the dollar strengthen considerably down there in March 2020, up to those highs that we eventually posted in February. So we've taken out that 50% fib level, and it remains to be seen where the next level will be. Going by the fib levels, we'll be looking for that 61.8 to potentially come into play. That's all the way down at 64.61. If we take a look at Euro US dollar, More pain for that yesterday, more downside, big red candle, and coming up just shy of that parity level that we've got highlighted on the chart. So this is where euro and US dollar are on a 1-for-1 basis. So that should provide some psychological support in the market. It will be a well-watched figure and could attract some speculative interest. We've seen the buyers step in so far today just ahead of that level. The lowest we got down to was 1.00047. So just in front of that, and we've seen some buying interest emerge. Still down on the day, still a long way to go in the session, but I imagine we will see some defense of that level by the bulls, but it may only be short-lived. Looking at cable, that's taking out lows this morning, actually, getting below 118.75, the previous swing lows that we've posted on the 6th of July and also yesterday on the 11th. So lower prices look set to occur there, and we'll be targeting the next major level on the downside, which is the pandemic lows, which comes in at 114.10. So looking pretty sick indeed. Finally, I'm going to take a look at New Zealand dollar versus US dollar. That broke down below support yesterday at 61.24. The next level on the downside here is the 78.6% fib level at 58.96. The euro also took a bashing yesterday, particularly against the Canadian dollar. Which remains very strong. We've seen that melt through that support level there at 133.87 and not look back at all, posting red candle after red candle. Little bit of indecision so far today, pretty flat on the session, but it's early in the session, so you wouldn't rule out lower prices. We'll take a look at Euro Swiss because that continues to look pretty awful too, posting a bearish engulfing candle yesterday, so no signs of that slowing, looking as though we're going to see further continuation lower. If we take a look at dollar yen, that continues to post new highs, severe yen weakness and amazing dollar strength, all combining together to push this much higher, and this is the highest level we've seen this at for 23 years. So yeah, these trends are persisting for now. Moving on to the cryptocurrency scene, we can see that Bitcoin is, well, we've seen it retreat from this resistance level here at 21,866. It's approaching this trend support level, which is only minor, which if it breaks may signal a continuation to the downside. Bitcoin holding up at the minute, but what isn't is Ethereum. We've seen a break of this trend, this short-term trend, to confirm this continuation lower potentially. We've taken out that support and no signs of that slowing for now. So looks as though further downside is on the cards there. In terms of the first downside target to look for, I'd be looking for a revisit of these swing lows here at 829.8. Moving on to commodities. We can take a look at oil first of all. We suggested that there may be a head and shoulders top that's formed here. We've seen prices rally into the neckline of this proposed head and shoulders top, and we've seen the sellers re-emerge. So we could see that now begin to head lower towards the measured move target of the head and shoulders top, which comes down at 85.97, which will be a pretty welcome relief for all of us that are battling increased energy costs. And also that would do a pretty good job of unwinding some of these big inflation numbers that we're seeing as well. If we take a look at WTI, seems to be posting a bit of a top as well. We've rallied into resistance here at 101.07 and seen the sellers step back in. So again, looking for lower prices towards 86.40-ish on that. Taking a look at the precious metals, silver still down in this important support zone here between 1885 to 1870. It looks as though we're defending that for now, but if that breaks, and it is a pretty significant support zone, as you can see here going back to 2020, then we could start to unravel pretty quickly on that down towards 1585. On gold, a little bit higher today, but overall still looking pretty weak. We've seen this break of trend. We've seen these key support levels taken out, and we look to be heading lower into some support here from this key low, this swing low here at 1722. Below that, we're looking for a move down to 1676. So just a big range for gold as things stand. And I know there's a lot of people out there that love to trade just gold, but it's not the best looking market at the minute, quite range bound and limited opportunities potentially on that. Moving on to the stock indices then, taking a look at the Aussie market, this similar sort of situation that we saw on riskier assets like Bitcoin and Ethereum. We're getting this sort of minor correction take shape at the minute, but seem to be trapped by this resistance at 67.57 and this small upward trend resistance. If this breaks, then we're looking for a continuation lower in what looks to be a pretty large top pattern that's formed. If we take a look at DAX, that's holding this support for now at 12,431, but rolling over again to the downside and potentially going to threaten that level. Maybe take it out and head towards the 50% fib level, which is down at 12,130. Nasdaq, again, we're seeing this situation where we get in this consolidation form. We can't get above the resistance, which is at 12,225. If we see a break of the short-term uptrend here, then the chances are we will see a continuation lower down towards this 61.8% fib level at 10,500. So bias still very much remains on the downside, although there is some potential for this to eventually form a little bit of a bottom, but it's got plenty of work to do before that occurs. S&P 500 failed again into resistance at 39.46, getting close to this short-term uptrend line and the 38.2% fib level, which has not done an amazing job. Still got this dark cloud of the head and shoulders top looming over the price action. So looking for lower prices, ultimately down to 3,500 and 3,333. The Dow Jones was quite interesting as well. Again, another failure into this resistance, this time at 31,447, and looks to be rolling over within this bearish channel and likely to head lower. So that's that for the roundup on the markets that I cover. Jamie, will you show us some stocks, please?
Yes, I will. Oh, there we go. Starting off as usual with our biggest winner and loser of the day. There were a fair few losers yesterday if you have a quick look at the right hand side of my screen here. But the biggest percentage move that I could find was SWVL. SWVL Holdings, which was down 24%. Had a little look about this earlier. Let's see if we can find it. Dropped on 23% on Monday afternoon after the company said it agreed to acquire Mexico-based Urban Mobility for an undisclosed sum to expand sales from its operations relating to transport as a service and software as a service. I'm sure that makes sense, but I'm struggling with it. On the flip side, our biggest gainer of the day, if we get it to load. It's not loading right now. We'll come back, we'll circle back to the biggest gainer of the day because the chart's not moving. We'll take a quick look at our stock heat map. And as you can see, it was a bit of a rough time yesterday, especially for some of the bigger names. The ones that stand out to me are Tesla, which was down 6.55%, and I'm not sure what that was off the back of, but I know Elon Musk was playing some funny games yesterday with regard to his Twitter takeover, or lack of a takeover, it looks like now. Meta Platforms down almost 5%, Amazon down 3%, Google down 3%, Netflix in there down 5%, Nvidia down 4%, so it's a pretty rough day. Let's go back to the charts. Here we go. We can circle back to our biggest gainer, and that was this PLRX, Pliant Therapeutics. Oh, not another therapeutics, that's a shame. But it was up 159%, so a really big move there. And this happened. PLRX said late Monday it began a public offering of 150 million of its common stock. So the company expects to grant underwriters an option to purchase up to an additional $22.5 million of stock. So that was what spurred on that huge move we saw there. But diving into some of the more well-known names, let's have a look. Peloton's top of my list on the biggest losers I've got on the more popular stocks, and it was down 12%. Came through this descending triangle continuation pattern. It looks like it's trying to rally. It might be trying to bottom out here. We are struggling with the lower lows. If I pulled up a MACD, I'm sure that would be showing some form of divergence, but regardless, this is a pretty bad move, gapping slightly lower and down 12%. If we look at the volume, nothing too scary on the volume, so one to keep an eye on there if you're following that. Twitter, this was obviously off the back of Elon Musk saying he was no longer going to acquire Twitter, I believe. Let's have a look. Well, that's a long story. I'm not reading all that. Twitter
He
with Elon Musk.
wanted Twitter to disclose information about the bots, which they refused to
Yeah.
do. Then they said they'd take him to court, and then that means they actually have to say what's going to be in the bots. So
Yeah, I did see that. It's all come full circle. I
yeah,
don't really know who wins out of this. I don't think Twitter do. I think they're in a bit of a, a bit of a rubbish spot. And it shows in their stock price, which as you can see here, a pretty big gap down, finishing 11.3% lower. We're right at this key trend line now, and it looks like we're going to try and break it. So this is a weekly chart. You can see price right now is moving lower. This is joining up the lows, sorry, the closes. So you can kind of draw that around there. So if we do get a rally, we've still got a long way to go this week above the trend line. To me, I mean, maybe this isn't the right way to view them, but I always try and drawing up the closes if I can. It would still be semi-valid, but if we do get a weekly close below it, this trend line is in pieces. So yeah, pretty rough day for Twitter yesterday. Jumping on Coinbase, we noted that this ran right into this resistance level that we had drawn up, and then that gap lower and closed 10% lower on the day. That will be in line with the moves lower on Bitcoin and Ethereum. Still looking at that 46 level down here for a bit of support. If we head lower, Alibaba had a pretty rough day yesterday. I think a few of the Chinese stocks did. I didn't read too much into them, but I think it's see if we can have a quick look. See if we can find anything. Trade major tech stocks: Alibaba, Tencent, Baidu in the deep end. Oh, this isn't giving us too much information. Yeah, I think there was some news. Maybe you know more about it than I do about China and some restrictions they put on some of their big tech names not following monopoly rules. I think seems to ring a bell. But either way, down 9%. It looked like we might get a break of this resistance level we saw, but we gap lower and we closed right at the low range of the day. So that's not looking so good now. There is some support down here at around $102, $103. So that'll probably be the next spot I'm looking at buyers coming in. Tesla had a pretty nasty looking day. It looked like we're getting a break above this short-term downward trending resistance. It looked like we're going to push above that, but this candle yesterday you can see is really negative looking, closing right at the low and actually down 6.5%. Looking for a move back down towards probably about 660 now. That's where I'd be targeting for the next bit of bull interest. Let's look at a couple more. Apple, nothing really to say. I'm not sure I've got that highlighted. I think that's from yesterday. We'll finish off on the only two that finished in the green from the stocks I look at, and that was actually GME and AMC. GME, we've noted obviously we've got the split coming up. That is on the 22nd, so still got a couple of weeks for that. But still showing signs of strength. We'll see if this heads back up to resistance. But this support has done quite a good job a few times in a row now. So if we get back to this support, I get worried that, you know, the more support is tested, the more fragile it gets. So we don't really want to see it kind of start dropping off back into this support level in the next week or so. I think that would be a pretty bearish sign. On the flip side of that, AMC is trying to get above this resistance. Yesterday gave us the most conclusive sign that it might with a really bullish close. If we look at the volume, we have not much to say on volume. But this is looking pretty positive. We're getting closes above these previous wicks now. And from here, I think the next level of selling will come in. Oh, that's not quite right, but around this level here. Let's get that right. There we go. That's where I think next level resistance will be. You can see we've had sellers coming over here throughout May, and then the sellers pushed this one down at the end of May as well. So that's what I'd be looking at for AMC for a bit more selling to come in. I think we'll leave it there. But yeah, pretty bad day, honestly. Just a load of red. So we'll see if there can be a bit of a turnaround on turnaround Tuesday.
yeah, let's wait and see. It's not looking that way at the moment, but things can change for sure. So let's move it on to the next phase of the show where we talk about our gun to the head challenge. So this is where Jamie and I pick a trade idea live on the video. Each of the ideas must have a stop and a target. We place all these ideas at market, so we're going to execute them right now. For the sake of the game, the trade ideas expire at 9 p.m. UK time, or when the stop or the target is hit. So they are intraday trade ideas. They're highly speculative because we're not spending too much time in coming up with the ideas. We're just picking something that we feel has got some potential to move today. What you'll also notice about these ideas is that every single one of them has a risk reward ratio in excess of 2 to 1. That's something that we prioritize in our trading approach, just to make sure that when we do win, we're always targeting much bigger winners than we are prepared to take as losers when we trade. So all these ideas are published on TradingView if anybody wants to check them out. This is yesterday's ideas. I went long of the Russell 2000, looking for a short-term bounce, but as we've just gone through, Jamie showed us that a lot of stocks were down yesterday, and obviously small caps were going to suffer as a result of that. So that trade was stopped out after an initial move to the upside. That's unfortunately the way it goes. And Jamie went long of dollar yen, very much playing in line with the dominant trend there, which was probably a more of a sensible move than my one. And as a result, he was rewarded for that. He was up over 1R on that yesterday. So well done to you, Jamie.
Thank you.
So today, new ideas. I'm going to take a look at Bitcoin. Now, I know I won't get much favor doing this, but I still think there's more downside to come in some of these cryptocurrencies. So Bitcoin, we've got this kind of triangle forming potential here for a continuation to the downside if we take out this short-term uptrend. We've already seen it with Ethereum. That's underperforming today. It broke through that level yesterday and it's triggered further selling. So I think Bitcoin could potentially follow suit, and therefore I'm going to try and sell that today. It already has had a pretty meaty move lower on the hourly chart from these highs that we posted on the 8th of July. But I'm going to speculate on further declines from here. So I'm selling that at 19,635. I'm targeting a move down to these previous swing lows here that we posted on the 18th of June, which comes in at 17,567. And I've got a very tight stop by Bitcoin standards, actually, and that comes in at 20,155. If successful on that trade idea today, we'll be looking for a 3.93 return, our return on that setup today. So I'm going to get that published now to our TradingView account. So if anybody wants to check it out, please feel free to do so. Over to you, Jamie.
Nice one, Joe. I'm just going to quickly show everyone what I had lined up, which was this Aussie dollar against Swiss franc, and it's good. I like it. It's moved so far in the right direction. I can't actually do it anymore, which is a little bit sad. But I was looking at this resistance level. We got a bit of a flag forming, and when I was looking at it, price was up here, but we've already moved down a fair bit, and would be about 2R on side. But that is the aim and the game of the show. I'm going to move on from that, although it does hurt a bit. I like this a bit less, but I just had to scan something pretty quickly, and what I'm seeing here is a support level that's held up a few times. I'm going down the same avenue of I need it to hold up again today, at least till 9 o'clock. It's looking pretty shaky, but you know, anything can happen. Could just be a small bounce, and you know, pick up a little bit of profit today. So that's what I'm going to hope for. So looking at the pound against the New Zealand dollar, and we're going to buy this support level. So buying at current price, which is 19388. We'll keep the profit level pretty close, and the stop level pretty close too. Oh, I've got to switch something around there because that risk reward is not where we want it to be. So let's move the stop up a little bit to just below there, and we'll keep the take profit. We'll move that a bit higher. How about that? So we'll keep the stop at 19366, and we'll keep the profit at 19459. So if that does play out the way we'd like it to, that will be a 3.23 move. So hoping for a bit of a bounce on pound New Zealand dollar today.
Nicely done. Good luck with that. So 2 trade ideas there for anyone to check out that wants to. They're on our TradingView profile. I'm literally just clicking the button on mine now. And Jamie will do the same on his trade idea too. So data-wise today, obviously could be impactful. potentially. We've got the German ZEW index, which is due out at 10 o'clock, 10 a.m. UK time, that is, may have an impact on euro and some of the European indices. At 6 o'clock this evening UK time, we've got the Bank of England Governor Andrew Bailey speaking. But really, we're shifting our attention to tomorrow because we have the US Consumer Prices Index in the US, as well as a interest rate decision from the Bank of Canada. Now, the consumer prices will be important because that's the latest read on inflation in the US. Obviously, we've got the Fed wondering what to do with regards to interest rates, and that could have a significant impact on that. The 1-year inflation expectation has been pushed to 6.9%, so that will be the key number that we're watching tomorrow. Anything in excess of that would indicate that inflation is still moving to the upside. If it comes in less than that, then we may be getting some indications that inflation is beginning to peak. So a really important day tomorrow on that front. And I think, Jamie, that's pretty much it. We have got some earnings this week as well as we kick off with a few big names in the banking side of things. Can you recall what we had today? Shall I just have a quick look at the calendar?
Ooh, yeah, bring up the calendar. I'm not sure off the top of my head.
Okay, let's bring up the calendar and look for today. So we are the 12th. So we've got PepsiCo reporting today. Then tomorrow, I believe we've got one of the banks, or maybe not. Delta Airlines tomorrow, FedEx tomorrow. On Thursday, we've got JP Morgan and Morgan Stanley. So a couple of big names there to watch out for. And then on Friday, a few more banks, including Bank of New York Mellon, BlackRock, and Citigroup, as well as State Street there as well. So, and Wells Fargo. So a number of banks reporting this week, which will potentially be impactful as well. Okay, that's that, Jamie. Let's wrap it up there. You're not in tomorrow, are you?
No, I'm not. I've got a little trip to Berlin planned, so I'm away for a few days now. So you're gonna have to hold
Beautiful.
it down, Joe.
I'm going to try. Yeah, we are also actually approaching 10,000 streams, Jamie, would you believe it, on our
10,000,
TradingView profile.
10,000 views, is it?
10,000 views, yeah. Let me
That's not
see
too
if I
bad.
can upload that since we've been doing it. So, yeah, on the analytics, 9,959 streams since we started streaming on
Stream views.
TradingView. So, give us your support, get us above that 10k number. That would be very much appreciated, and hopefully people have learned a few bits and pieces from it, and it's helped people set up their trading days.
Yeah, that's what it's all about. So hopefully that's happened, yeah.
Yes, cool. Right, let's wrap it up there then. I will not see you tomorrow, so have a fantastic break, Jamie. Well
Thank
deserved.
you. Thanks very
And
much.
yeah, we'll see you next week.
Cool. Thanks, everyone.
See ya. Bye bye.